The Pivot Trend Flow by BigBeluga is a tool you can use to turn messy swing structure into a clean, adaptive trend read that actually reacts to what the market is doing instead of getting dragged around by noise. We're going to go over what this indicator is and how you can use it in your trading, and if you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load your market in time frame, then click Indicators, type Pivot Trend Flow, and pick the one by BigBeluga. It's open source right on TradingView, so you can pop the hood later if you're curious. Let's drop it on the chart. This is the Pivot Trend Flow. In plain English, it takes the latest pivot highs and pivot lows and turns them into a moving ceiling and a moving floor around price. When a candle closes above the upper line, the tool flips the trend to bullish. When a candle closes below the lower line, it flips it to bearish. The band that shows up is green in a bullish state and red in a bearish state, and it helps you keep your focus on real structure instead of random noise on the chart. Here's what you're seeing on the chart. That green or red band shows the active trend state wrapped around price. Green means the tool has detected a bullish push. Red means it has detected a bearish push. A close above the averaged high line flips the band to green, and a close below the averaged low line flips it to red. You'll also notice small labels that confirm structure, an up triangle in an uptrend when price clears the last pivot high, and a down triangle in a downtrend when price breaks the last pivot low. Those simple labels act as continuation cues without cluttering your screen or getting in the way of your read. Now let's open the settings, because this is where you decide how reactive or steady the tool feels. Pivot length is the strength setting for finding swings. I'm going to set this to 10. In TradingView terms, a pivot gets confirmed when you have that many bars on each side of the turning point with no higher high for a pivot high or no lower low for a pivot low. So a length of 10 means the swing proves itself across roughly 10 bars to the left and 10 bars to the right before it's confirmed. That gives you sturdier swing points and filters a lot of tiny fake moves, but it also reacts a little slower because the chart needs those extra bars to lock the pivot in place. With pivot length set to 10, breaks of those pivots usually carry more weight because the market had to respect that level for longer. When price finally closes through it, that breakout or breakdown is more likely to be a clean structural event than it would be with a very small length that fires on every little wiggle. That's why a length of 10 can feel more reliable when you want stronger signals instead of constant flips. Next is the average window for pivots, which controls how many recent pivots get averaged to draw the band. I'm keeping it at 5. That tells the script to blend the last 5 pivot highs for the top of the band and the last 5 pivot lows for the bottom, then smooth them into those dynamic reference lines. If you raise this number, the band gets steadier and flips less often. If you lower it, it reacts faster and flips sooner. I like 5 here because it stays responsive without getting twitchy. After that, click OK so we can walk through how to use this to trade in a way that's simple and practical. Alright, here's how I like to use it. First, I let the band set my bias. If the band flips green, I'm thinking longs. If it flips red, I'm thinking shorts. Then I use the up triangle and the down triangle as clean prompts for entries and management. In a green state, if price breaks the most recent pivot high and an up triangle prints, that's a straightforward buy entry point. In a red state, if price undercuts the most recent pivot low and a down triangle prints, I'm looking to short. I'm letting structure do the talking, and I'm timing off those labels instead of guessing or chasing random candles. Perfect. Before we trade with this, we're going to add a simple volume confirmation so we're not taking breakouts on weak participation. Open the indicator search, type volume, and choose the inbuilt volume under technicals. Once it's on the chart, double-click it to open settings, jump into the Style tab, toggle on the volume MA, and change its color to white so it stands out. Hit OK, and you're set. Those vertical histogram bars are the raw activity for each candle. Higher bars mean more contracts or shares traded during that period, lower bars mean less, and the colors link to candle direction. Green when the candle closed above its open, red when the candle closed below it. The white line is your volume moving average, and we'll use it as a threshold so we only act when activity is above typical levels and the move has real backing from the market. Now here's exactly how we'll take along. First, confirm the trend is bullish. That's the pivot trend flow band flipped to green with price trading above it. When price closes above the averaged high boundary, the tool switches into a bullish state and wraps price with a green band, which gives us permission to think longs only. Next, we need structure to back us up. We want a previously established pivot high from within that green regime to be broken by price, and we're not talking about a wick poke. We want a real candle body close above that pivot high so we don't get faked by a quick liquidity grab. The indicator helps here with its labels. When an up triangle prints at the break of the prior pivot high, it's a clean continuation cue that the trend is pressing, and that body close gives the break the confirmation it needs. Before I hit buy, I check that the breakout candle had enough fuel. Slide your eyes down to the volume pane and make sure the matching volume bar is green and closes above the white volume MA. That shows participation expanded beyond its recent baseline and adds conviction to the push. Breakouts backed by above average volume are usually more reliable than breakouts that limp through on thin activity. We take the long, put the stop under the most recent swing low, and set the take profit at 1.5 times the risk, then let it play out without over-managing it too early. Now flip those rules for a short. First, confirm the trend is bearish with a red band and price trading below it. Next, you want a clean breakdown of a previously confirmed pivot low inside that red regime, and it has to be a real break, no wick poke. I want a full candle body close below that pivot low, and ideally the indicator will print a down triangle right near that level to mark continuation. Then check the volume confirmation on the exact breakdown candle. The volume bar should be red, and it should close above the white volume MA, which tells you there was enough sell-side activity behind the move to give it follow-through. At that point, take the short, park the stop above the most recent swing low, and set the take profit at 1.5 times the risk. Then let it play out without second-guessing every small retrace. In summary, pivot trend flow takes the age-old idea of swing structure and packages it into a visual that's easy to read, quick to act on, and surprisingly low lag for how much clarity you get. The band gives you the regime, the pullback gives you the entry zone, and the up and down triangles give you clean continuation tells so you can add, trail, or hold with a plan instead of a hunch. It's also open source on TradingView, which means you can study how it's built and trust what it's doing. This is not financial advice. Everything here is educational, and the indicator alone is not a complete strategy. You should layer your own confluence. Price action, higher timeframe structure, key levels, and risk management, and make your own decisions. The creator also notes their scripts are for informational and educational purposes only. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.